Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Tuesday market webcast. All right, so we drew this box a couple days ago because we've really been jammed in here. Bulls are trying to convert it. I'll stretch it out a little bit so we can get a little bit of perspective. Look, they're trying to lift up above and go test 4,200, which is fine. What I would say is that the chances of this thing coming back and retesting the top edge of this box are probably pretty decent. And we haven't seen any real consistency from the bulls in this area. We were talking about it in the chat room yesterday afternoon, actually. You can go back a couple of years and look for, when's the last time we've really comfortably traded in an area up above 4,200. Here, I'll just do it for you guys here too. So you've got this, you've got this 4160, 4170 area, which has been a thing. They couldn't get it done here. They lifted above it for a day, did 4208 half here. You've got this a big run up to 4180 and down. Then you've got this fail here, 4175. This fail here. That's at 4217. But I mean, now we're back in August of 2022. You go back another one, okay? There's your August of 2022. It tried to get above 4,200s here for a small period of time in summer of 22. Didn't do much here. And once it really lost it, which, call it, here's 4,300. Once they really lost it, and it stayed lost, which is really back here in what you want to call it, 13 months ago, they haven't been able to get it back. They spent a little time above here, like I said, summer of 2022. Last summer we traded as high as 43.27 half, and they ended up bringing that down and making the lowest of lows, which we've seen lately, which is down at that 35.02, where they just, circle that day, bears, because, it really, there were some opportunities there that I think the people that really wanted the market to come in, it didn't happen. And then we've had a couple of consolidation periods, a few here. I could have easily drawn another box here, and then here where we are now. So the point I'm trying to make is we are getting up into an area that the bulls have been uncomfortable in trading for a year and a half, effectively. If it's different this time, and I'm not a person that goes through the markets expecting things to be different this time, or looking for unexpected outcomes from things that have been doing a certain expected thing over and over again. That's called being just a constant contrarian, and that's not a way to be super successful on a consistent basis in the markets. I would rather be, right 8 times out of 10, have the market do something different, adjust, and then do that, than be wrong 8 times out of 10 and then feel great that on the 9th time it finally did it. Well, what about the 8 times it didn't work? Now what? You're constantly digging yourself out of a hole, which is why if you're a trader and you're a contrarian, if you're a short-term trader and a contrarian, that can become a very rough process and a very tough way to go through your trading, day in and day out. So I will be very curious to see, as we get through the rest of this month and into next month, if the bulls can find comfort above 4,200. We shall see. Now, what you don't want to do is say, well, okay, expect the expected, we'll short it. No. That's not what you do. It's what a lot of people do. And, people did it. I'm sure they did it here, and I'm sure they did it here, and I'm sure they did it here, and here, and here, and here, and here, and they've been holding on and holding on and holding on, and, adding to losers or trying to press an agenda with capital is also not a very good way to spend your trading existence. I would rather, look, if we end up short this thing, it's going to be because they break the 9-day and convert it. And what's the 9-day? It's the blue line here that they can't deal with. That's number one. There's going to be a test. We talked about this a couple days ago. There's going to be a test of the daily mid-band. Looks like as a function of time. Remember, we talked about the difference between a function of time and a function of price. As a function of time, it's because the market is continuing to move steadily in a direction, and as the 20-day moving average sheds lower prices, time catches up to where price is. That's just the way it rolls. Testing a moving average as a function of price is what happens when the other side brings it in. So we're up here, they come down, they test this as a function of price. We're down here, they push it up and test it as a function of price. If you go back a couple years ago and you look at some of these big down moves and big up moves, eventually the green line catches up as a function of time, just because things are trendy. Now, the other thing you have to avoid if the bulls continue to take things up is the false belief that, well, we can't go up any farther. I mean, this thing's parabolic. It's running away with itself. No, it's not. It's been sitting in this freaking box for like 10 days. Don't buy into that one. That'll just get you hurt. Okay? It is not parabolic. It is not overbought. It is not over this or over that or out of the range or out of the lane. That's just nonsense. Any more than it was when it came out of this one. Fight it all the way up. It's played out. It's done. It's done. Okay. So let's talk about this box for a minute, and then I'll give you some numbers and I'll shut up. So it's out of here. Okay. What does it do? It comes back and it tests what? The daily mid-band. You could see the same thing here. This line's going to continue to lift. It's going to continue to lift. And if we do get a move back, whether it's today or in a few days or whatever, how price reacts here is going to be key. Held here for a couple of days, and then you get this move. So be very aware over the next few days. If you don't watch another one of these all week, just be very aware of how price reacts to the 20-day simple moving average on a daily chart, especially if you're a longer-term trader. All right, hourly chart. I spent more time in the daily today than I thought. If you think these things are scripted, you're out of your mind. Never happened. Okay, so higher high here. It's got to deal with 4,200. This 3-4 hours that we spent at weekly pivot fighting over it yesterday and then losing it the way that we did that early in the week tends to be a bad look. You tend to get directional pricing later in the week for whichever side loses a battle with weekly pivot that early on. The bears are going to need some news to knock it down and keep it down. In a vacuum now, it's going to want to go up. It's tested a big area. It's held. It's above the 9-day. Again, it blew the 9-day on Friday. We talked about that yesterday. And now we're up here. So it's tested and held some big levels as support. You got volume weighted average price, 41.82.5. Proprietary moving average, 88. And it's just kind of riding things right now. The high is 41.96.25. We spent most of the day either getting chopped up or clipped up and the whole thing. We were short here below weekly pivot, but when the turn came and it held, we had to get involved on the long side. And that's what I mean by trying to jam a narrative into price action. I thought it was a good opportunity to be short. Break this, and you get a move down. Didn't do it. When it converts, what do? We end up getting long 57. We've rolled our stops up, and it turns into a decent trade. You have to respect the failures in these areas. And it works both ways. It's not just in getting long and getting short as well. You have to respect the failures. But you have to have enough wherewithal to accept the fact that my thesis is wrong. I need a new thesis, and I need one right now. Versus, I'm right, it's going to do this, it's going to do this, look how smart I am, blah, blah, blah. Yeah, okay. There's a lot of broke smart guys. Go with the flow. All right, that's all I got. Sorry this is so long. Have a fantastic day. Be safe, be healthy, take care. Trade them well. I'll talk to you tomorrow.